Hello traders, my name is Frank Paul, one of the mentors at forexmentor.com. I'd like to welcome you to this latest weekend complimentary video presentation. This weekend we're going to once again focus our attention on the COT MarketWatch service, and I'm going to walk you through a mini case study example which demonstrates both how we compile data, how we read it, and how we strive to apply basic technical analysis to confirm a COT signal that would suggest a trend change. Now we're going to go back no further than 1 week ago to Friday, March 15th, which is a very short period of time when you consider the length of the trend readings or the duration of them, typically entailed, sometimes lasting months and months. So I just want to walk you back 1 week to show you what we had to say about the euro pound and what we were specifically preparing for and how we would confirm a trend change. So to do that, I'm going to take you to the members area of the COT MarketWatch service. Once you log in, this is the page that you see. Now, unfortunately, I can't show you the whole thing. I have to record in special screen resolution, which cuts off a lot of the information. I apologize for that. I'll just sort of scroll through as best I can here. We have a Getting Started section, comprised of a user's guide video presentation and a user's guide PDF, which explains our approach and what's available to you and what to do with it. Then we have a weekly COT wrap-up report, which encapsulates all of the most important, most urgent signals that you want to pay attention to each week. We'll come back to that in just a minute. Then we have individual links for our tables and charts output for all 28 markets that we cover here. Category A are currency majors: Australian dollar, Canadian dollar, euro, Japanese yen, New Zealand dollar, pound sterling, Swiss franc. Now you might be wondering, where is the US dollar index? We do cover it, but it's embedded within each of these individual currency summaries. Okay, so in other words, we don't just look at COT net positions with respect to the Australian dollar. We aggregate it together with net positions on the US dollar. Our approach is that it's never enough when you're talking about currencies just to look at one currency only. It's the relative bearishness or bullishness of both currencies that make up the forex pair that you have to pay attention to, because sometimes they cancel each other out. It's not enough to say, oh, commercial traders are at an extreme bullish stance on the Australian dollar. If that's offset by the US dollar, then there's nothing much to get excited about. So there we have it, 7 currencies in Category A. In Category B, we have a total of 8 cross pairs: Aussie yen, Aussie Kiwi, Euro Aussie, Euro Canadian, Euro Pound, Euro Yen, Pound Swiss, Pound Yen. That comprises most of the popular forex cross pairs. There are others, but we can't cover everything, so that gives you a fairly representative cross-section. So a total of 15 different currencies. And obviously there are no COT metrics pertaining to Aussie yen, Aussie Kiwi, etc. What we do is basically apply the same approach as for our forex majors, in that we're aggregating positions for 2 currencies, not just looking at one side, the base or quote only. Okay, that's how we do it. Very simple formula for that. Now, I've been critiqued by 1 or 2 people for the fact that we are only aggregating contracts, and that doesn't reflect contract value. Very true. However, I cannot derive an accurate estimation for contract value because they're not all dated on the same day. I can't just say, okay, the exchange rate for the Australian dollar is this today, for the Japanese yen that today, and then just apply exchange rates to convert the underlying futures contracts to a monetary value, because I just don't know what the correct exchange rates were for each of the contracts as they were executed. So just a minor administrative detail. We're trying to keep things simple, and from my experience, that's good enough. I don't have any problems by not monetizing these contract values. Just looking at volumes certainly is sufficient. Then our Category C commodities coverage, we have a total of 9 different asset classes: cocoa, corn, cotton, gold, That's spot gold, by the way. Light sweet crude oil, natural gas, soybeans, sugar, wheat, silver, and then 3 equity indexes, the Dow Jones Industrial Average, the consolidated version. That's as opposed to just the regular Dow Jones line item in the COT data. That one is beset with data gaps, so we use the consolidated version instead. I have it on good advice that that is the correct metric. S&P 500 E-mini and the S&P 500 stock index. So again, going back to Friday, March 15th, I haven't updated the tables as I record this, so this is the most recent version. I'll click on the Excel file. Bear with me for a second. It just takes a moment to load. Any second now. There we go. So there's the read-only Excel 9703 version of our data tables and charts for Euro Pound. So you can see we have the panel on the left pertains to the Euro. The panel in the middle pertains to pound sterling, and then we aggregate the two for an implied COT position for Euro Pound. And we're always paying closest attention to the index values for commercial traders. For spec traders, it's just basically the inversion of that. So if commercial traders are long 35,920, then all other market participants combined are short by exactly that amount, because for every long position held by commercial traders, there's an offsetting short and vice versa. But it's where commercial traders register an extreme at the tail end of a trend where we start to pay attention. Most of the time, commercial traders are counter-trend hedgers, so we're not going to do what they do all of the time. We're only going to look for trend reversals when, let's say, commercial traders are extremely net short at the tail end of a long-lasting rally, or extremely net long at the tail end of a downtrend, which will turn the market around and point it in the opposite direction. Now, what we see if we aggregate euro and pound sterling is that the commercial traders have been extremely bearish on the aggregation of the two currencies going back to January 22nd, week after week after week. Okay, that shows up in the Excel version, and of course you can just click open a PDF version as well. What we haven't showed you is that we have tables complemented by charts. So we have, for example, for each individual currency, we have euro commercial versus spec net positions index. Same thing for the quote currency in this case, pound sterling, two charts, and then we have two charts for the aggregation of the two currencies, euro pound commercial versus spec net positions and the positions index. This is arguably the most important one right here, net positions index for the currency pair. Okay, so that's kind of what the data looks like. And we really try to help you by not just publishing numbers and leaving it at that, but summarizing them, the most important findings anyway. We don't talk about COT market signals that are not particularly interesting, but we encapsulate that in our weekly COT wrap-up report. Again, I can't get the whole page view on here, but there's the title page. You can see this is posted for Friday, March 15th. And so we provide sort of a paragraph for each currency or other market that's doing something interesting, broken down by the categories that I just showed you a moment ago. And we'll just zoom out here a little bit. Our entry for Euro Pound for last week is as follows, and I quote, "The 8th straight week of bearish divergence signals has yet to issue the downtrend confirmation signal we've been waiting for, namely a daily bar close below the February 26th swing point low at 85.76. By the end of next week, however, that move should be a fait accompli. Prepare for a downtrend getting underway shortly. See chart extract 6 below." So I think you could probably glean from that commentary that we already had a specific technical event that we were looking for that had been commented on in previous week's updates. Okay, specific level 85.76. It seemed to have some significance on the daily chart. We had referenced that going back earlier than March 15th. So we'll just flip down to the charts Again, it's a little bit awkward to try and get it all on one screen. But this is what it looked like for Friday, March 15th. I had an A, a B, and a C. All of that combined to create a downtrend continuation setup. And just to be 100% sure that market flow was turning bearish on the daily chart, we needed to see price break that February 26th low at 85.76. Okay, you can be gutsy and maybe drill down to the lower intraday time frames once this corrective top labeled C is in place. But I don't specifically advocate a gutsy approach. I like to just make sure that market flow and a couple of other simple metrics such as the 10-period exponential moving average here on the daily chart are lining up in that direction. Okay, so that's what we were looking for. And we did state very clearly that by the end of this week, that is by close of March 22nd at the latest, we should see the signal we're looking for. What I'd like to do now is hit the pause button and fast forward to Friday this week, March 22nd, and see how that signal or event played out. We're now looking at the daily chart for Euro Pound as of the close of Friday, March 22nd, and you can see that the market did the work for us that we were looking for. It gave us a gap open if you compare Friday, March 15th into Monday, March 18th. Price opened and even closed below this level right here, the February 26th swing point low at 85.76. Now, I'm not for a second suggesting that this is some big grand slam hit it out of the ballpark trend call here. There's been relatively limited downside potential to this point. However, we're not thinking about day trade potential here with the COT market reviews. We're thinking about trend sequences that should last for weeks, if not months. So given the fact that only Monday of this past week we got the trigger we were looking for, a break of support, confirming bearish market flow, what we're saying here is that that should be the fundamental bias if you're more of a medium to long-term trader. That trend should remain intact for some time, pointing us lower still. Okay, so there hasn't been a lot of potential here, but it's still early in the process. We should see a downtrend continuing for some time. What I like to do is sort of flip back and forth between regular candlesticks and Heikin Ashi. Heikin Ashi can really do a good job highlighting the momentum even where there are individual ups and downs, gaps, what have you. And we can see a progression of Heikin Ashi down closes going back now to March 13th, continuing into this week. So it's just kind of a secondary built-in kind of momentum. If you see a progression of shaved top bars, that's really strongly indicative of bearish momentum, particularly since we now see the 10 EMA bearish crossover that we're looking for, that moving average painting in red, sloping down, pointing us lower still, which would suggest that each up close we've seen this week is just merely noise. Now, you can certainly fine-tune your analysis, and we advocate this strongly by drilling down further to at least the 4-hour chart. And again, the same way we're looking for a progression of lower lows and highs, we're looking for that here on the 4-hour chart too. So going back to what was our swing point C on the daily chart here, the high from March 12th, we're looking for each corrective rally culminating in a lower high. And where you see that, that is not always, here's a high, but here's a slightly higher high later. That is at least a cue to think about selling the latest rally in the downtrend. In fact, we end the week this week on what looks like the latest corrective top here that should resolve early next week into yet another leg down. Okay, so market flow is very important. It's very simple, if not misunderstood by some people. You're looking for a progression of lower lows and highs in the downtrend. In the uptrend, you're looking for a progression of higher highs and lows. That is the definition of a trend right there. So anyway, again, I'm not suggesting there was, thousands of pips potential on this call, but the point is you have to know what the confirmation signals are on price action itself to tell you that, okay, maybe all the way back here we were getting bearish signals in terms of the COT data. And in fact, we even had a false breakout right through here. But I don't think this would have been specifically tradable on the short side because, again, we want to see price structure, market flow, confirming a change in trend. That would be not just price dips down, but rather price dips down, then retraces to a lower high, then breaks that low, and goes on to make a progression of swing point lows and highs thereafter. That's what we were looking for last Friday. That's what we've got this week. So now it's going to be really interesting monitoring this move as it presumably unfolds in the downwards direction over the coming weeks. Bearing in mind there will be individual upwards retracements within that flow. So anyway, I hope that's helpful. Not all of these signals are going to prove correct, but if you're practicing prudent trade management, risk management, you should be able to at least get your stop to break even before anything adverse or untoward happens. And then you just consider the latest information, whether that changes your view, yes or no. But for now, it does appear that the call of a top reversal on euro pound, first presaged by COT data, then confirmed by our simple technical analysis, so far at least, is pointing us in the right direction. Hope that gives you a feeling and a flavor for what COT MarketWatch is all about. If you're a longer term trend trader, if you like to focus on swing trades, position trades, even for that matter day trades, this can definitely help you glean the predominant trend. So if the trend is down but you're looking at a long, you know it's counter trend, that would have you take certain precautions. As a scalper, you probably don't have much use for this, quite honestly. Scalpers trade any move up and down in relation to the longer term trends we're looking at. But day traders should be aware of COT trends, and if you're a swing or position trader, you have to be. There's just absolutely no way you can monitor the trend intelligently, I don't think, if you don't clue into COT metrics, and that's what we're here to help you with. If you have any questions or comments about today's presentation, please feel free to email me via frank@forexmentor.com, although I should mention I'm going to be on a spring break vacation Monday through Friday next week, and in fact our week-ending wrap-up next week will be delayed just a couple of days. Very unusual. We're super punctual and super reliable. It's almost always 4 p.m. Pacific time Friday afternoons, but we'll be updating on Sunday next weekend just because I'll be taking a relatively rare vacation break and won't be around on Friday. Anyway, thanks for joining us. If you send me an email, please be patient while I'm away. I'll get back to you as soon as I can. In the meantime, enjoy the rest of your weekend, and we'll talk to you again soon. Bye for now.